What's up, traders? Thank you all so much for clicking on this video. I appreciate your time. I appreciate your support. So thank you so much. Go join our free Telegram group. We have nearly 50 traders in there and we are expecting hundreds more soon. It's exciting. The link is in the description below. Go and join, okay? Let's get to back testing. As I pull up my charts right here, so how do I backtest? Well, if you didn't see the last video, I definitely recommend going and checking that out, but wait till after you finish this video. This video is also going to have a lot of gems for you. But the way we do it is 4 hours is going to be my entry time frame. I am a swing trader. I believe the best strategy is the MMXM model into the power of 3 model, but I utilize it specifically on the weekly time frame. I look for weekly internal range liquidity to external range liquidity, and then I go ahead and I pretty much look for the 4 hour market structure shift reversal opportunity, and we just kind of look for power of 3 within that, and I'll show you. Okay, so I'm gonna go ahead and put on a little bit of study music really quick because I like to study with some music on. So right here, as we bring this up real quick, we what you do is your entry time frame. This is for, free free trading view. You don't have to buy the subscription or anything. This is how I backtest. I backtest in hindsight, and I kind of do like a little bit of target practice, and I just train my eye to see opportunities that happened in the past, and then I go ahead and live test it in the live markets, and I apply what I backtested to the live markets. And in the back testing, you can't necessarily journal emotions, but in the live testing, that's where emotions come into play. So we just take our approach, our edge, apply it to the live markets, continue to journal your emotions and alleviate mistakes. Okay, so you get to your entry time frame, you go as far back in time as you can, right? So if you scroll all the way back in time until it says power up your plan, drop like a little line right there, boom, and that's going to be your starting point. So whenever you go to your weekly time frame, you can look and be like, this is where I can look for entries, okay, from this side on. And we did that in the last video. We were measuring the range right here, and we seen that price was heading towards external range liquidity, okay? And so we had that 4 hour market structure shift on the lower time frame, and the reversal happened, and the market maker sell model was on. And from there, we started looking for weekly power of 3s. That's whenever the weekly candle opens, it creates a high, and then it goes lower for the distribution. The open high is the manipulation. So accumulation at the open, manipulation at the high, and then distribution to continue lower, and then it closes off, right? And we want to get in on that weekly candle. And how do we do that? I'll show you right now. So if we go back right here, this is where we left off. We're going to look for the next candle. Okay, so we took entries up here in this area, and now we're going to go to Sunday at 17. This is the new weekly candle open. So we're still bearish. We haven't taken out external range liquidity yet on the weekly time frame. And so right here, I have a bearish bias. I'm expecting a weekly candle to open high, low, close, right? So the weekly open happens right here at the 17, and make sure that your charts are set to Eastern Standard Time, New York, okay? New York UTC right there. That's how you have it set every time. So right here we go to Sunday 17. This is going to be the weekly open, okay? Weekly open. All right, so you can see the weekly open actually opened up. And what did it tap into? It tapped into this internal range liquidity, right? And it actually distributed right away. We don't look for entry opportunities right at the open of Sunday or anything like that. Not even Monday, okay? Monday is going to be like the accumulation. That's where it's going to create like all of this like engineer liquidity, and Tuesday can also do that too. And then Wednesday, Thursday, Tuesday, Wednesday, Thursday, mainly Wednesday, Thursday is whenever you look for the manipulation, and that's whenever we look for entry opportunity. So if you notice right here, We have the accumulation happen right here, and this expanded right below external range liquidity, okay? And that's totally fine. We're still expecting the weekly candle to kind of have a little down close, momentum. We just stick to the bias, okay? And right here, we have this accumulation. Price manipulates above it. Turtle soup takes out liquidity. I'm going to go ahead and write turtle soup. Liquidity grab right there. And from here, this is where we kind of look for entry opportunities. So before I get into all that, what I'm going to do is I'm going to delete all of this real quick because I'm going to journal my entry here, okay? Just delete all of those so that way we don't see it on the weekly. So what I'm going to do, I'm going to lock in a little bit, you guys, and I might get a little bit quiet. But what I'm going to do is I'm going to write like 1, 2, 3. So it's like step 1, this is what I see. Step 2, this is what I'm looking for. Step 3, okay, so on and so forth. So just kind of pay attention and read what I type. Okay, so after we kind of write that out, what we're going to do is we're going to take a screenshot, okay? And I'm actually going to delete this line. Take a screenshot, download image, boom. So it's going to download to your computer. You're going to bring up your journal, and this is where you're just going to add a new page, right? We're going to go to GBP USD. I'll add in the date and everything. And we're not going to write anything just yet as far as like win or loss. We are going to add this right here. Add image, upload a file, and we're going to go to downloads. It's your most recent download. GBP USD time frame targeting sell side external range ready. Okay, so now we're gonna drop to the 4 hour. Now that we journaled our pre-trade thought process, our bias, and reasons why we're looking for sells, right? So right here, we're gonna write placing my fib on the most recent 3 candle wick swing high right here that had the expansion leg right here, because this created a little range, right? And so right here, it engineered that liquidity, manipulated above turtle soup, and it tapped into optimal trade entry. It also tapped into this up close candle, which is going to be a bearish order block right here. And so this right here is going to be, in my opinion, a really great entry opportunity. And what I would do is, I talk about dollar cost averaging a lot, but in this scenario, I only see one PDA. And I've talked about how if there's only one PDA, I'm not going to break up my 1% risk into multiple. I'm going to just keep it 1%. So right here, what I'm going to do is I'm going to place a sell limit right at this level right here at the order block. And I'm going to put my stop loss at the 100% fib level. Okay. This is kind of a little critique from the last backtest video, If you haven't seen that, again, go ahead and watch that after this video, and you'll kind of, at the end of it, I explain these little critiques that I'm going to kind of do going forward to potentially see if I can maximize, gain and whatnot. But we're going to stick to a 1 and 2. It was triggered right here, right? It's triggered right there. And targets were hit right here at a 1 and 2. Now, if you wanted to, you could keep targeting for those external range liquidity lows right there. Our strategy just goes for a 1 and 2, but I'm going to notate like targeting those lows right there. They got hit, things like that. Okay, so just pay attention to what I'm going to write. Again, we're locking in. I'll just put it right down here. And we're going to download that image. We're going to add it right here. Insert that image, upload the file. Kind of just re-elaborate upon what you already wrote in your screenshot, you know what I mean? Entry time was March 9th at 13, which is going to be 1 p.m. EST. March 9th, 1 p.m. Eastern Standard Time. also going to copy this, and we're going to add that to our title up here. And we're going to write win because we did win that. Entry price. We can just copy our short position. Entry price is right here. Stop loss price. We're going to write how many pips it was. So what's that? 39 pips. 39 pips. Take profit price. Copy. Paste. And this was a 1 to 2 bar. About 78 pips. Okay, and then it's going to be plus, because we risked 1% here, and we're up 5.14, so it's plus 2%. The account is up 7.14%. And we are journaling our losses as well. We took a loss earlier, just to review what that loss was. It was the second trade right here. It was February 6th, and on February 9th, we had dollar cost averaged into two different positions. And our pre-trade thought process was that the 4-hour time frame had market structure shifted, and we were now anticipating price to send lower towards weekly external range liquidity, as shown in this picture right here. And after closing below the weekly candle, up close candle, after closing, the weekly up close candle created a bearish order block right here. Okay, created this bearish order block after this candle closed right there. We dropped to the 4-hour time frame to look for a bearish market structure shift reversal entry opportunity. And right here you could see that it had this market structure shift right here. So I'll explain that. 4-hour actually had a good displacement presenting bearish FEGs right here. So this was the displacement creating these bearish FEGs right here. And it was closing below and disrespecting old bullish FEGs like these ones right here that actually supported price higher just recently. So in my eyes, this was a good market structure shift, and I was comfortable with risking 1% in total. And there were two PDAs, this one right here and this one right here. And so I dollar cost averaged my 1% into two positions, which was 0.5%, and I entered 0.5% sell limit here, and I entered the other half here. Both stop losses went at the same place, which was going to be above both PDAs, taking them both into consideration, of course. And right here, you could see that we just got stopped out. And that was going to be a minus 1%. And this was whenever the account was pretty much break even from that point. Right here, we were up 1% because we dollar cost averaged and it only hit our first PDA. So we were only in 0.5% and we hit a 1 to 2R. Right here, 1% minus the 1%, we're break even, then we hit this one, and so on and so forth. Again, go ahead and watch that last video after this one. But we are now up 7.14% plus 2%. And I'm going to write down okay, so now what we are going to do is we are going to go back and we're going to go and look for more opportunities. So now that the weekly has ran out, we're going to delete all this, right? Might as well just delete it all. Let's just delete it all, start off with a real clean slate. So it ran out the external range liquidity right here. After that, we don't look for buys. Okay, we don't look for buys into this. We want to wait for price to retrace again back into internal range liquidity. And so right here, you can see that price, it retraces up and it taps into this weekly fair value gap. Okay, and this is why you don't also want to rely on just discount and premium and discount, because you can see right here it didn't even come close to premium price right here, right? Instead, it just really respected this fair value gap and it continued selling off. So premium and discount, it's a good way to measure where price really is at, and it's a good way to measure for like stop loss purposes, but it's not something to rely on. What I do recommend relying on is going to be like these fair value gaps and these order blocks. Okay, so right here we have this fair value gap, right? And as soon as price retraces and taps up into it, that's whenever we're going to drop to the 4-hour time frame. Okay, so if we just go ahead and write right here, what I'm going to do is So now I'm looking for the most recent 3 candlewick swing low whenever price tapped into that internal range liquidity right there, okay? So the most recent was this one right here, and we just follow the most recent ones that get created, right? We have this one right here. And price does close below it, but it doesn't displace below it. And it doesn't create any fair value gaps within that leg. And another thing that it does is it closes within this bullish fair value gap right here. And we want to see it disrespect and close below that. You know what I mean? You can see that price held it not once right here, but twice right here. It sent price a little bit higher. And what it did right here was it engineered liquidity from both sides, these highs and these lows. And so right here, you can see that it engineered this high and it turtle souped that high right there. And then it had these lows engineered right here and it targeted those lows as like sell side liquidity, right? That's how these markets move. It's an algorithm. So right here, this was not a market structure shift. This was, in my opinion, a failed market structure shift. No displacement, did not disrespect an old bullish PDA. It did market structure shift, but it just was not what we were looking for. So what we do is we just relocate the most recent 3 candlewick swing lows that get created. And you can see that this one right here was the most recent one. Boom. Right there, it got market structure shifted, created this fair value gap, and it closed below that bullish fair value gap right there. So what I would write right here is So here, because the first point of interest after that would be this up close candle order block right here, this bearish order block. And right here, you can see that this would be the first tap into it. That would be the first entry. If we dollar cost average into this, which we are, and then the second entry is going to be this second FBG. And the third one would be, in my opinion, this one right here. This other up close candle right here, which this one, I would consider it's still going to be a bearish order block, but I would consider it a breaker block because it did take out this liquidity right here in turtle souped right before the market structure shift. And then this one would be like a mitigation block, if that makes sense. I mean, you don't have to get too deep into it. You could kind of keep it simple with yourself and just understand that this is going to be a bearish order block. Okay, so here we are. Price taps into the first one right here. So my sell limit would be, as soon as this candle closes below and a market structure shifts, I look at those PDAs and I'm like, all right, I'm gonna set a sell limit right here. Stop loss would go above all three PDAs. You take into consideration all three of them, okay? Because if price wants to retrace even deeper, you don't want to get stopped out on your positions that you entered over here at the first point of interest, right? And then the third entry was right up here. And you can see that that third entry never got tapped into, but we're going to consider that because we don't know if we're looking at live price and we just see that what happened right here. If we just see this right here, this is the market structure shift right there. We have no idea what price is doing next, but I see these three PDAs. I'm going to treat this like a live price. This is how you backtest. Don't cheat yourself, because if you don't backtest the correct way, you're only cheating yourself, bro. This is how we get better. So right here, I'm going to write 3. Just keep this. Okay, now we are going to go ahead, download this image. The first entry's price was right here. Time of entry was, what was the time of this one? We got into it. It was 1 a.m. Eastern Standard Time. So London session. It's March 28th. Yeah, both positions were triggered on March 28th. At the same time, second entry price was at the fair value gap right here. And time entry 1 Eastern Standard Time. Stop loss for both positions. So we have the stop at 1.32258. Entry, take profit price. Targeted a 1 to 2. Whatever. So take profit price was 1 to 2 are hit. And then we're going to take that same profit price level and we hold it. We hold our second position for that same price level. And so this one would be 2.35 are hit. And second entry, take profit price 2 point, what was it? 35R. And right here, how much is that? So 0.33 plus 0.66%, 0.33 times 2.35, 0.77 plus 0.77% equals 1.43% gain. Our account balance at now 7.44. 8.87. Okay, and then from there, now that this has happened, also want to write down is to take out the external range low for 2.42 long. Okay, we just want to keep those things in mind so that way we can review our journal and be like, all right, well, it hits this a lot more often, right? All right, so now that the weekly has market structure shifted, and we're now looking for sell-offs and all of that, what we could do is right here, the new weekly candle opens over here, and we hold that bearish bias now. So Sunday, and we want to see the weekly open, and it engineers, accumulates liquidity on both sides, and then it manipulates above on like Tuesday, Wednesday, or Thursday. You can say it happens here on Tuesday. And whenever it manipulates above, what does it tap into? It taps into this up close candle right here, but it actually kind of disrespects it. What does it tap into? That'd be crazy if we just kind of use that. This is why we train our eyes, because in live price, would we actually use that bearish FVG right there? We have to identify what are the areas of sensitivity that price has respected in the past that price can potentially respect again. And these ones here, right? If we just drag them out, drag them out, drag them out. So we have weekly open here. Before I get into that, let me just jump to the weekly time frame real quick. So it's right here. The external range liquidity has not been taken out just yet. Right here on this candle. This is the candle that we're trading right now. Okay. So Okay, so now we're gonna drop to that 4-hour time frame. So we're gonna set our sell limit above that at that first PDA right there. Boom. And stop loss above all three. And second entry, since it's 3 again, we treat it like the same last. It'd be pretty much the same exact last entry opportunity. And you can kind of see it taps into both of them, right? So what I'm gonna put is So now I'm going to download that image. Important things to note, y'all, know what I'm saying? Just some important stuff to know. That's how we do it, y'all. We put in a solid hour here. I owed that to myself. I needed to man, my camera's all laggy, you know what I mean? We were on here for a little bit, but I uh I would like to do another hour. Hopefully later on after work we can do another hour, and that'll be 2 hours, making up for the hour that we missed yesterday because I owe it to myself. But I hope you all got some value from this video. This is how I backtest. I journal everything. The only thing I don't journal is my emotions. Because emotionally, I can't really detect my emotions when I already know what happened. But in live markets, when I have no idea what's going to happen and I apply this approach, these notes, this technique, right now, I am seeing patterns. I am seeing different things like happen often. Like, for example, I see that London session around 1 a.m. and also like this was like one of the first times New York session, but London session specifically is oftentimes that entry time. Like it happens a lot. And I wonder if it's because of the daily open, right? The daily opens and it also creates its high for the day as well within that London session, right? So those are some things that you end up like taking out of back testing, and those are some things that you end up realizing. So again, I hope you got some value. If you did, drop a like, please. It helps so much. It also gets these videos in front of other traders just like us, and it helps us continue to learn and evolve, which is really awesome. Go join that Telegram group. It is free. The link is in the description. Drop a comment if you have any questions, concerns, or you have any insight, advice, anything like that. I always am looking to progress, get better, and grow. And if that means that you criticize me or provide me some insights, I appreciate them. I can take constructive criticism. I'm not one of those people that get hurt about it. So please drop a comment, let me know what's up. And thank you guys again for watching. Subscribe if you're not already, and click that bell so you know when we upload. We will see you later. Peace.